Hi, Shae Russell here from Fat Tail Media. And joining me today from the Sydney office is Nick Frappell, global general manager, I believe, of ABC Bullion. Nick, thank you for being here today.
Hi, Shae. Thank you very much for having me.
Now, our timing couldn't be better. Now, this interview between us has been in the works for a couple of weeks, but we just happen to be placing our interview right on the back of the short squeeze in silver. So it's sort of structured what we're going to talk about today. But before we talk about silver and the shenanigans that are happening over in the silver market, of course, I cannot have somebody who is the global general manager of a gold bullion dealer sit in front of me and not ask the very first question, which is, gold. What's happening in it? We've seen a fall in the gold price. There's been, none of the shenanigans that are happening in silver managed to lift it up out of this trading range that it's stuck in. Is it the paper market that's just not moving? Is physical demand, increasing at your end? What trends are you guys seeing?
Well, I think the main thing about gold at the moment, you're right, it's really a sideways market with some pretty ugly moves on both sides, but certainly some pretty tough dips lately, given that, we believe it's a dip buying market. But a lot of that from the, if you look at the period from New Year onwards, is the dollar index has been staging, a recovery, and that generally has created headwinds for gold. Also, near the beginning of the year, early January, when the US bond market started to look at the spending plans for the incoming Democrat Biden administration, initially the bond market took a little bit of fright and there was a bit of a reset. Bond prices dropped, yields spiked. And when they spiked, gold came off quite sharply because yields and gold price sort of, inversely related. Now, bond yields have come back because the bond market's basically sort of taken a more sanguine view of how that supply is going to be dealt with by the market and a more relaxed view. So yields have fallen again, and that has supported the gold price. But at the same time, in the other direction, you've had this sort of slightly stronger dollar. Now, technically, where gold has found support, although it has been gently shading off, it's come to the top of a technical indicator that I look at quite often, and it's quite popular in foreign exchange and gold market, called the Ichimoku Cloud. If you look at the weekly Ichimoku Cloud, and we can certainly put a slide of this later, the weekly cloud top, which is a first line of support, is just pretty close to where we're at now. So gold is bullish, it's trending up, it's near a support level. It's certainly in a situation where all of the positive indicators that tend to support gold, bar the recent move in dollars, generally are supporting it. Just going back to your question, or going on to your question about physical, we've noticed a definite pickup in actual physical demand lately in the last couple of weeks around Asia. The Shanghai Gold Exchange has moved back, I think, into a small premium. We're seeing good demand emerge from other Asian hubs, certainly in Singapore and other neighboring nations. So physical is actually looking better, and the outlook's good. I mean, you have to kind of abstract a little bit, stand a little bit further back, and say, yeah, it still looks good. But if you just looked at the last 6 weeks, 2 months, you could have been chopped to ribbons for sure.
Yeah, actually, I like that take that you've got there, is that you've just got to stand back. Now, what we'll do too is I'll make sure I put a link to your monthly reports that you send out, because your clients, you send them an in-depth report about your technical analysis each month on what's happening. So if people are new to technical analysis, your reports are actually a great way to start to get some understanding of what you're talking about when you talk about your Ichimoku clouds, because while I am familiar with them, I myself don't use them as one, and they can sort of be the next step up for technical traders. I just wanted to circle back to something you said there. You talked about the rising demand in the Asian markets, which is great to see, and I think people should keep that in the back of their mind when it comes to precious metals, that despite the spot price of gold has sold off, but you're seeing physical demand increase in the Asian market. What about retail demand in Australia? Are you seeing, I mean, I've been to your offices before. I know you've got very busy, a shop front there.
Yes.
Are you seeing an increased inflow of, people walking through the doors demanding their bullion?
Demand is good. Demand is definitely good for gold, and it has been good for quite some time. And particularly, with these dips have been good opportunities for people. Of course, the really big thing has been just recently with silver. Silver has obviously seen a really big uptick in demand. So I'd say it's a little bit silver dominant at the moment. But yeah, gold demand, both gold and silver demand on the retail front domestically, both for just general retail buyers and also for people with self-managed super funds. It's certainly been brisk. And, we'll go on to silver and you'll probably drill down some, more precise questions there. So
I was about to say, stop answering because you're going to take away all my questions.
Yeah.
All right, look, we do have to talk about silver because silver is the story of the past 7 days, which I find really funny because, normally silver gets, you can't buy this sort of publicity for love nor money for silver. And the past 7 days, it all started with a game shop, I believe it is, that nobody had ever heard of before, aside from a few hardcore fans. And somehow we've seen this enormous populist trader movement into silver. Yes. My phone's blowing up with messages from conspiracy theorists or people just looking for answers to demystify what's happening in silver. Yeah. So I think we really do need to spend some time around this and try and remove some of the mystery, because I'm not one for conspiratorial theories. I often find that, the truth is stranger than fiction to begin with. Yeah. But first of all, let's talk about the big price action. Yeah. Like, we're talking a 20% jump in the past 48 hours. Now, I know it has sold off just a tiny little bit, but how often do we see jumps like this in silver? And does this change the technical setup for the physical price of the metal?
First of all, the technicals for silver have looked pretty good for quite a while. And we've been sort of saying that, fairly regularly. The price is above certain levels where, it's in trend both at the daily time frame and also the weekly time frame. So it's been positive for a while. I had some really big gyrations, obviously, a while back. And, if you look far enough back, certainly at the kind of March of last year, where it presented a fantastic opportunity. But it's been looking good for a while. And when we sort of talk about, say, has it broken out? That's a really interesting question. I think the really key breakout for me was in June of last year, end of May, June last year, when it broke up above the weekly cloud after that really precipitous drop that it had when all markets were going through a huge kind of reset around about the time that people realized the enormity or likely enormity of the impact of COVID. So that's obviously a long while ago, and it has made huge progress since.
Someone's in a hurry.
Eric, really?
Yeah, no, that's okay. Keep going.
So, but I think the breakout that's perhaps, more relevant to sort of the here and now is after silver made that fairly recent high, around about 30-ish a while ago in US dollar terms, it's formed a sort of a kind of a broad, roughly kind of pennant-ish looking pattern, which if we break up above that level, shows every sign that we could extend higher and extend higher, perhaps by an equivalent length to the previous rise. So in US dollar terms, we're looking at 39 to low 40s. That's, possibly just going to let the last set of crooks go get chased by me. So that recent breakout, which happened this week, or potential breakout, it hasn't, it's a little bit too early to say. That's the thing about pennants, they can kind of tease you a bit. Mm-hmm. What we're seeing today was actually a fairly decent drop in the price. And I'll be charitable and I'll say that drop is perhaps a retest of the breakout. Mm-hmm. If that pennant pattern is true and follows past sort of, past behaviors, we certainly have scope for a fairly big uplift. I also look at another kind of chart, which occasionally I think you've seen and we've talked about, which is point and figure. And point and figure is interesting because it actually gives very specific price targets, which if the price makes that target and it doesn't go back up below a certain level, that target remains valid. And they're pretty uncanny, actually. So I'm going to give you that slide as well. But basically, I've got two targets there. And the one on the slide I'll show you is to $42 US. So that sort of gives you an idea. I think you wanted to say a few things about GameStop and maybe similarities or dissimilarities to silver. Is that worth exploring?
Oh, it absolutely is. Thank you very much for getting there. Do you know, it's funny, I really, before we get to that, I really enjoy technical analysis. Yeah. So for all of the fellow technical analysis nerds watching, there's an awful lot of value to take away from what Nick's saying. All right, so I do also want to talk about, we'll go to GameStop now, but basically what happened in GameStop, sort of, it shook the markets when nobody thought something like this could happen. You know, we're essentially looking at the mobilization of retail traders, and they shifted a stock in a certain direction. Now, they tried to do that with silver, but obviously it's come off the boil. So do you think you've got any insight? I mean, you've got an institutional banking bullion background. So is there anything you can explain here to help, investors understand that this isn't that markets are being manipulated. It's that, investors aren't going to be able to nudge silver in the same direction that they are able to move GameStop?
I think if you look at the sort of returns and the sort of incredible move in GameStop, that's right. Doing that in silver would be just kind of semi-unthinkable. Although, strange things have happened. The really key differences are that when you look at GameStop or Nokia or, any kind of vaguely similar share, there's a finite amount of shares you can buy. Silver's a bit different. For one thing, it might not be the biggest market in the world, but there's over 1 billion ounces of silver being being supplied every year. And the market is in something of a surplus. Reliable data shows that it's in a surplus. So that's a really substantial entity, or it's a really different beast to, say, trying to chase out some shorts in, like a mid-sized company, for example. The other thing is that, silver is, there's really substantial stocks, and every day more is arriving. So it's a big beast, relatively. If you look at the combined stocks in London and London and New York, there are public reportable stock levels. It's about 1.45 billion ounces at the moment. So now with the London figures, I'm relying on something from about 8 weeks ago. I don't think they've changed dramatically, because if you look at the data series, it doesn't change much. If you look at New York, those figures are kind of last week's or very recent. So it's pretty huge. There's also substantial amounts of silver in Hong Kong and India. Difference there is that no one's telling you how much there is, but it's a lot. So there's big above ground stocks. That makes a difference. The other thing that's really different is that if you look at what the Redditors are doing, they're looking at it, and their line of thinking is that there are some really big shorts out there, and the Redditors are going to, go at them. There are some big shorts out there. The producers have some really substantial hedges on. Mm-hmm. So those guys are short. The thing you have to remember with a producer is when they're short, they were naturally long to begin with. So they're just selling forward metal that they've got underground that they're hopefully going to successfully dig up and get smelted or refined. Mm-hmm. If you look at the banking, I say banking, but I'll call them the swap dealer sector, because that's the category under which they are found within the COMEX reportable numbers. It looks like they're quite short too. The number's like 251 million ounces or something. So it looks quite large. But when you're running a forward book at a bank or metals trading house, and you're short of COMEX silver, you are not naked short of silver. Nobody is going to be short that amount of silver. That's just kind of bonkers. So what happens is you are short the futures and you are long inventory. You are kind of long, if you like, at the warehouse, or you're long OTC. And if you look at the evolution and the change and growth in those swap dealer positions, what's very, very obvious is that they go up and down just as positions of the hedge funds or managed money investors go up and down. So if investors buy loads and loads and loads of silver, the swap dealer position kind of is the inverse. It gets bigger, but the other way. Now, that doesn't mean that the swap dealer is saying, well, look, commodity trading advisor, you just bought 10 million ounces of silver off me or 200,000 ounces of silver off me. I'm taking the other side of that bet. That's not a great way to be. You'll cover that, but you'll use a device called an exchange for physical to make sure that even if you bought the silver back on the exchange, you'll flip that long back into the spot book. The reason why is because you actually get paid out for being short the futures. And I know that we had this discussion where you didn't want it to be overly technical. I don't want to be overly technical. But if you are short futures in a market with an upward trade, it's upward yield curve, which generally silver and gold do have, then you get paid for rolling that position along. That's just the way it works. And it means you don't have any price risk, but you have an extra little earner in your forward book. So it doesn't, it's not free money and not as easy as it sounds. There are times when you get dinged, but generally it's just an extra earner. So that's why the swap dealer position, they position themselves that way around. To think that it's a naked short of that size would be a really tremendous misreading of what's going on. So that's just a kind of like, if you like, hopefully an easy explanation that it's not quite what it looks like.
I really like this. Oh, I'm throwing my pen around. That's the second time I've done that for an interview this week. I really like that explanation you've just given me because a lot of the futures markets appear murky. And sometimes there's been this attitude of, oh, well, if we can't see through it, there must be fraud or manipulated or all these sort of names are applied. But it is just because the commodities market are quite difficult to understand. There's, it's worth a few $1 trillion and there's millions of moving parts to it. So I really appreciate that insight. And that's nowhere near as technical as the explanation you gave me over the phone the other day. So that's great. Yeah. Now, I have managed to throw my pen to the other side of the room, so I'll just quickly retrieve that and hopefully nobody notices. Now, before we go on, because I really want to start talking about two other precious metals that most people don't actually look at.
Right.
But I believe down in your younger years or back in your younger years, which couldn't have been that long ago, Nick, you were a little bit of a platinum and a palladium trader. And you were telling me something about a gamma trade story that happened way back in the day that's very silver to the silver squeeze we've just witnessed.
Yeah, sure. Well, that's right. I'll perhaps we should talk a little bit about platinum and palladium just as a really sort of a reminder of what they're there for and why they're so useful. Because the big thing about platinum and palladium is that they're important metals for environmental purposes. They help clean car and truck exhausts. They have their own kind of little advantages relative to each other. So platinum traditionally has been a better metal for a diesel catalytic cleaning, and palladium has been better for gasoline engine cars. That's one of the things that's actually hurt platinum lately is that people's appetite to buy diesel cars has actually declined in the last couple of years, partly because people are much more aware that older diesels produce particulates, and they were kind of put off by that. So, but the auto-cat element of platinum palladium demand is really incredibly important. In fact, if you look at demand for palladium, it's 85% of all palladium demand is driven by the car and truck industry. Well, I should say the car industry because it's gasoline. It's coming from the gasoline side. For the platinum side, I think it's like 36 or 37% is coming from the car and light truck side. So these are they're really special metals. They are used for other things. And when I traded platinum, it was important for a whole bunch of things, including glass manufacture, high quality glass manufacture, chemicals. And I guess you could look at it, the three prongs or the three legs upon which you generally find yourself quoting people. You'd always be quoting hedge funds and other financial entities. You'd be quoting car companies who buy platinum forward. And you'd also have oil companies that want to use platinum because in a kind of unexpected way, you use platinum to clean, car and truck emissions, but you also use platinum to help make really, really high quality gasoline. So when you look at an oil refinery from afar, somewhere in there is a chunk of platinum. So if you've kind of got all of those customer bases covered off, those are the kinds of people that you're dealing with, and you're lending to the oil refineries. You actually are borrowing from the car companies because they buy platinum 1, 2, 3 years forward. You cover that in the spot market, so you end up with a 2 or 3 year platinum loan, which you can then flip around and lend to the oil companies. So again, there's lots of moving parts, kind of interesting. And palladium's slightly different. You've got the car company element. You've got other types of consumer as well, and you've got the ever-present investment community. So one of the things that happened to me, and this kind of goes back to a little bit similar to the GameStop thing, where a bunch of guys decided to run in the platinum market, and I think they were sort of they weren't. This was before the days of Reddit, or this wasn't a retail thing. But anyway, I was trading spot. I had a spot platinum book and a forward platinum book, and I'd always had these calls from this money market broker. He said, "Oh, Nick, if you ever want to make me a platinum price through the broker, through me, and I said, "Yeah, of course. You've done me a lot of, you've always been a great gold broker." And I was kind of thinking, this guy's never even broke silver. Like, when is he ever going to ask me platinum? Anyway, one Friday night, he said on the box, he said, "Oh, Nick, I'm not going to do his Swiss accent, but he said, "Oh, Nick," he said, "can you just make me a 1 month platinum quote?" So I said, "Yeah, sure, I will." And so I made him 01, and he goes, "Hello, I borrow 5,000 ounces without even drawing breath." I'm like, "Oh, okay, that's like Friday night." I'm literally like, my colleagues are waving from the door saying, "Frappers, your beer is going cold," because it was in England. And I was like, "Guys, I've just got to wait for a bit." And I hopped onto the line and said, "Who's the name on the other side?" And I won't necessarily say exactly who it is, but the company was satirized in Rolling Stone as the vampire squid. So I thought I better quickly cover that. So I called another US trading desk and borrowed it back, and then said, "Okay, all done, I'm out for beers." So in effect, I had borrowed and lent platinum very quickly for 1 month at what was the equivalent of about 4%. I then went home and forgot all about it. And I came to work on Monday, and things looked a bit different. The price was higher, a lot higher. And when I looked at the forward curve, the first thing I heard was someone shouting through the broker that one of another bank had just borrowed platinum at 85% for 1 month. Platinum interest rates had gone up 80% between the close on Friday, or certainly when I left the office on Friday and entering the office on Monday. There then followed an incredibly hectic week. I think it went up to about 105% that day. And then a bit of sanity began to reassert itself. And that was a great day for me. And the following day was not a great day for me because all of the moves, all of my revaluation kind of went the other way. I was very fortunate to escape kind of more or less unscathed. It was a really tricky, it was a bit of a tricky week. It was also hell on wheels making spot that week. That that month, it's difficult to break it down because I think I've got the chart somewhere near me, but I need a magnifying glass to look back at that week. So it was March 2008. That month had a $500 trading range. And I think the previous decade hadn't seen a year with a trading range bigger than $50 or something. And I think most of that monthly trading range was Monday and Tuesday or Wednesday of that week. It was just beyond, it was crazy. And the reason why it was crazy, and this is where it goes back to the Gamestop story, is that what a bunch of funds had done was they'd gone in and they'd bought platinum, they'd borrowed platinum, and they'd bought upside platinum call options, which is like a favorite trick of some of the Redditors. And what happens is when you buy the upside calls and you buy, if the price starts moving towards those call strikes, the people who are short those calls have a choice. They either buy the calls back, which they probably won't because the calls are probably now more valuable, so they're locking in a loss. The other thing they have to do is they have to buy the underlying, in this case, platinum spot, because they have to, that's the only way they can hedge their short option position. And that when they do that and it starts pulling the market higher, that's basically when you've got what the Redditors, people call it gamma squeeze. Of course, once those options expire, then the gamma squeeze element disappears unless you try it on again. And if you look at a chart of platinum the next month, basically it, fell very fast. So yeah, that was certainly experience. So it was, kind of interesting.
It's funny you've mentioned that. I've actually got a couple of questions and we're going to get to them. So that you said March 2008, that's right, essentially as the US stock markets broke from the financial crisis.
Yeah, look, I think at the time, a lot of commodities were really doing incredibly well. I can't remember where crude was around about that time, but crude was doing sort of too well and subsequently crashed. Interestingly, crude broke through $100, and our crude analyst said, if you are long of crude at this level of crude futures, the crude futures curve is so tilted up that it costs you $20 a roll or $10 a roll just to be long, which is kind of the inverse of being short for the silver shorts I was telling you about.
Yep.
So what that means is that crude has to go up $20 just to pay you for being long. The moment people realize that, it's going to absolutely fall like a stone. And a month later, I think I can't remember just how terribly fast it fell, but the point is that a lot of different commodity classes were really, really, I think copper was doing, I'm not saying it was all March that year, but if you look at that year, it really was the year to be long of commodity, as long as you got out at the right time.
Yes, and not everybody did. Okay, now before we start talking about where platinum and palladium are going to go, because, we've still yet to make the investment case for them. I'm still not, I've been writing to my subscribers that I definitely think there's a future for platinum and palladium.
Absolutely.
But something we need to touch on is the Musk versus hydrogen debate. So Elon Musk is currently leading the electric vehicle battery revolution, which could stifle platinum and palladium demand. But you and I had an off-camera conversation, or actually on the phone, the other day about the potential of hydrogen to disrupt this and actually increase the demand for platinum and palladium. Do you have any further insights to this?
I have probably some basic insights, hopefully ones that are worth relating. Look, I think one thing is that, Elon Musk is, he's an immensely clever guy and an immensely clever and good publicist. So, the first response to his statement, which he made last year sometime was, of course he would say that because he's, up to the hilt in the battery business. And that's, a reasonable thing for him to believe. But on the other side, there is a significant part of the business that is looking at hydrogen fuel cells. And the impression I get is that the battery electric vehicle and the hydrogen fuel cell kind of debate actually is much more complementary to each other than the kind of Elon Musk comment suggests. The reason why is because not all vehicles are the same. And battery electric vehicles might be great, for example, for a small car, but certainly the hydrogen lobby are making a very good case that hydrogen fuel cells are significantly better for larger vehicles and for trucks, so that's one big difference. What kind of vehicle sector are you looking at? The other thing is as well is that you can fill a hydrogen vehicle up relatively quickly and easily, whereas a battery electric vehicle at the moment is still taking quite a long time to fill. Now, there's some talk that really, really supercharged fast charging batteries are around the corner, and if they are, that changes that part of the equation naturally, because at the moment the problem that battery electric vehicles would have is the pace of charging is slow, and you need a distribution network by which you can charge easily. So without that, it doesn't really matter which one you've got. The battery electric has an issue. The other thing that matters is the precursors to making battery electric vehicles and hydrogen fuel cells. Battery electric vehicles, they're growing fast from a very, very small base. So as they grow, is that going to have, and this is a genuine question, I don't know the answer, is that going to have an impact further down the road, metaphorically, for things like rare earths, lithium, and so on? Because they're part of the battery supply chain too. So you can't necessarily think of just, batteries versus hydrogen in isolation. And on the hydrogen side, hydrogen's relatively easy to make using natural gas as a feedstock. But if we're going to go towards, net zero and all of those things that people are talking about, then you need to sort of be able to make kind of green hydrogen. Now, the pace at which, it's all the answers to those questions. How easy can we make green hydrogen? How easily can we roll out networks to distribute, plug in your car or pump hydrogen into your car, fast charging batteries, availability of lithium? All those infrastructural and supply chain issues are going to determine it. But what is probably the case from the little that I see is that we'll end up in a world with probably both technologies kind of coexisting, not just the one technology. And that's basically going to benefit, the more the hydrogen fuel cell story is a success, the more that will benefit platinum, because platinum and hydrogen fuel cells, go together. And then the more that the battery electric vehicle issue, the more successful they are, the more other metals are going to benefit. And it won't necessarily be PGMs.
I think that's a really good point that you've made there with the hydrogen and the EV battery debate, is that the final metallurgy isn't really solved yet. These are still new technologies that the market are playing with. So we don't really know how important these precious metals will be. We just know what they can do right now. And one of, especially platinum and palladium, is they're very good in high temperatures, so much so better than gold and silver. So that definitely changes the potential for the industrial demand for them to grow later on. I guess that brings me to my next question, which is, if you're going to invest in precious metals, especially ones like platinum and palladium, do their prices at this point now behave like a commodity, or do we see the prices in platinum and palladium behave a little bit like precious metals, like gold and silver?
It's a bit of both, because the PGMs, or particularly platinum and palladium, are part of the precious complex. But the difference is that fundamentals matter in a way that they don't really matter to gold and silver, because of the above ground stocks and the sheer scale of the market. Platinum and palladium both have concentrations in terms of both geographically where they're from and in terms of, the consumer end. So, for example, this dependency on auto catalyst. I would say that platinum is the favored metal. I'll go out on a limb and say that, because platinum has a future, even if the carbon economy changes rapidly. So if we go to a sort of more hydrogen economy, platinum is still needed in a way that palladium would be less necessary if there was a genuine reduction in the use of gasoline-powered cars. I don't think any of that's going to happen tomorrow. But the point is that platinum has a use now. Now, you can use platinum in gasoline-powered cars as well. It's just that palladium is slightly more optimal. In fact, it's been a little bit of a surprise that, given the decline in diesel engine, car demand, it's been a little bit of a surprise that there hasn't been some switching back to platinum. But be as that as it may, the other thing is that one thing is that the environmental and emission standards that are in place today are only tightening. So this is why even when fewer and fewer cars, not fewer and fewer, but even if you have a year where fewer cars are sold, there's still more demand for platinum and palladium because coatings in the catalysts are actually deeper and heavier. And the reason for that is because more and more people and more and more countries are insisting on the latest emissions standards. And also because as people are also looking for more fuel efficient cars, you get sort of things like lean burn technology. And lean burn technology, you need a heavier coating for the platinum and palladium catalysts there too. So, when you look at countries that are relatively behind the curve in terms of emission control, and I'd say, big countries like Indonesia, India, and so on, perhaps some of the bigger African countries that are relatively smaller economies now, but I'm sure in the future will be bigger, say, for example, Nigeria and so on. These guys are going to go, they aren't going to go, as we discussed, progressively through like Euro 1, 2, 3. They're going to go very likely straight to Euro 6 or whatever the equivalent of Euro 6 is in 5 or 10 years' time. So that tends to really keep, that's a heavy demand for these kind of metals. So they're both useful, but I think platinum has a sort of more robust future because you can see where it works in a hydrogen economy.
I guess that brings me to my final question for today. Now, I know ABC Bullion actually sell platinum and palladium bars, which unfortunately I didn't get my hands on when I was there last time in Sydney, however many eons ago I was allowed to travel. Do you see many investors inquiring about them? Is it more institutional investment? Is it more self-managed funds? I guess the point I'm trying to make is most people's relationship with platinum and palladium comes down to wedding ring shopping. Yeah. And looking maybe for some sort of speculative platinum group elements stock. Yeah. But the idea of owning the hard metal in their hands might be foreign to them. So who are your main buyers of platinum and palladium bars? And also is the demand increasing, or does demand come and go with the news?
Demand is definitely increasing, and I'd say the people that really are interested in our platinum bars are, as with gold and silver, retail and SMSF. And the reason why people are interested and they've got growing interest in these bars is that, apart from all of the things that we've said about how useful platinum is, and it is a truly amazing metal. I mean, they've all got something to offer, but, platinum does a tremendous amount in the background. It's both an adornment metal, an investment metal, and an industrial metal. The other thing is, as well, is that it has its own correlation or lack of to other metals and to other asset classes. So that's also an appealing aspect to people who want to extend their metals portfolio. So yeah, we're seeing growing demand. It's a beautiful metal. That shouldn't necessarily, make a difference. But it's a metal of growing popularity. It's an incredibly important metal. We've stressed so much about talking about the autocat interest and so on, the hydrogen fuel cells, sort of, nascent kind of interest that could develop in the future. But actually, if you look behind all of those really, really important uses, it's actually got a bunch of industrial uses. It's a really essential metal. And relative to gold and silver, there's not a huge amount of it out there. It's like sort of 8 million ounces a year annual production. total supply, not annual production. So it's a relatively small market, and definitely one that should remain of interest. The other thing I'd say as well, if I can, is that when the price had dipped, the cost of production for platinum is not cheap. So it's not an easy metal to make. It's not an easy metal to find. It's not an easy metal to extract or smelt in places like South Africa and Russia and so on. So that, again, is a big supporting factor.
You actually took the words right out of my mouth. I was about to make a point about the cost per ounce extraction in South Africa. And this is before we add the processing on top of the metal. I believe platinum's probably selling at a discount to what it actually costs to get it out of the mine in South Africa at the moment. I foolishly can't get my price chart won't load, so I can't even tell you what price it's trading at. So that alone, when you've got what it's selling for, let alone the cost of extraction, before we even throw on the processing on it, it helps make the case for why platinum in particular makes a good investment. And you know what? There's nothing wrong with investing in things that are shiny and pretty.
No.
I have some wonderful gold jewelry that Bullion Group I bought from Bullion Group. So you know what? It's okay to invest in things just because you like the look of them.
Yeah, absolutely. And one thing we were talking about silver earlier, which I think is supposed to be the most lustrous metal on the planet, or something. But it's got again a beautiful and very interesting, worthwhile industrial metal, as well as a precious metal, and as well as an investment. But we're the largest silver refiner in the Southern Hemisphere. So, we get a lot of metal that goes through our circuit, and that means we're really well placed to actually deliver physical silver, to the retail investors that come in and buy from us.
Oh, okay. I did lie when I said one more question. Clearly, okay, so as you know, there is this big kerfuffle in the US because of the short squeeze, and apparently all the dealers are out of silver. And I know of one US dealer that has silver. While I've got you, are we seeing the same physical silver cruncher in Australia? I know you said you were well placed, but I assume that means you've got lots of feedstock ready to refine and get into bars to meet physical demand.
Yeah, no, we're in a good spot for that, and also ABC Bullion does have the ability to supply silver from mints such as the Royal Canadian Mint and the Royal Mint and so on, and RAD. So we have metal from multiple supplies, but I think the important thing is that we have a tremendous amount of silver that actually goes through ABC Refinery. Of course, ABC Refinery makes the bars that get delivered to ABC Bullion. So yeah, we are hearing that there is premiums are higher elsewhere in other territories, and the availability of metal has been constrained as there's been a rush for retail bars and so on, bars and coin.
Excellent. Well, that is an excellent position to be in. Nick, I believe I've taken up more of your time than I said I was going to. So thank you very much for joining me. I absolutely loved your technical explanation of the price movement, and hopefully everybody was able to learn a couple of new phrases there and a new technical method. And also, too, I really appreciate your insights on platinum and the gamma trade that you were part of over a decade ago.
Well, thanks, Shae. Thank you very much for having me. It's a real pleasure to be interviewed by you.
Oh, thanks, Nick. I'll speak to you later.
All right. Cheers, then. Take care.